Welcome, ladies and gentlemen, to Precious Metal Summit Conference here in Zurich. And now it's my honor and pleasure again to talk to Rick van Nieuwenhuyse, whom we know for a long, long time. And now he's the CEO of Contango Ore, a very interesting company already in production, but with a lot of potential. Rick, great to see you.
Good to see you again.
Thank you very much for taking the time. I must say I'm quite impressed from your company, what you guys have achieved. And you have already one mine in production in Alaska and two more projects, which look to me outstanding. So how was the year?
Oh, it's been a great year. Last year we had a bit of a reset with the share price. I don't know if you followed it. Then it was not a fun Thanksgiving time and Christmas. What happened was President Biden didn't approve the state Alaska transportation plan, which meant that the state had to put bridge weight restrictions in place, and which meant for us that we'd have lighter trucks delivering less ore to the mill at Fort Knox. Well, that shareholders kind of freaked out, and the share price went down. Of course, when Trump got elected, he approved the transportation plan, and so it was all for naught, basically. So hence, sometimes you just get caught up in politics.
Yeah, well, sometimes it's funny, and fancy at the same time. But you made it. That's
so meanwhile, we put some more effort into the operations, and last year was a startup year. So you always have things that you want to improve on. In addition to bridge weight restrictions, we had to contend with heavier, more water and more ice in the ore than planned, and so we fixed all those little problems. Simple things like knocking snow and ice off of trucks using a cattle guard. I don't know if you know what a cattle guard is.
No idea, but it's okay.
It basically just makes the truck bounce a lot and shakes off the mud and snow. So just things like that, just to fix all the little things.
Super. So how's the production now going this year? What is planned for next year?
So we guided to 60,000 ounces of production this year. We're ahead of guidance. I think we're about 57,000 ounces or so. And our last campaign starts next week, and it'll be a light campaign because it's the last one of the year. It's always a bit of a catch up. I think we're guiding about 8,000 ounces, so we'll be above our 60,000 ounce guidance, and our all-in sustaining costs we think are going to come in around 1,600, so a little bit below cost, below our guidance, which was 1,625. So
super.
I think the Manh Choh operation is kind of going according to plan. Kinross is the manager and operator. They're doing a great job. Gold price is doing well, so we're making lots of money.
Okay, super. Then let's go to your second project in Alaska. What's the status there?
So the second one we have lined up is called Lucky Shot, and this is a mine that was in production from 1928 to 1942. President Roosevelt then used the War Act to shut down all gold mining and make it illegal to own gold. People forget this. This was the United States not long ago.
Exactly.
It was only illegal to own gold in the 70s, right? Under Nixon. Anyways, so we're drilling now underground. Actually, the drill rig arrives this week. And basically, we're doing enough infill drilling to outline 400,000 to 500,000 ounces of resource, and then complete a feasibility study level mine plan on producing 250,000 ounces. And our grade is probably going to be delivered to the mill, so a diluted grade, not a resource grade, but a mine grade of about 10 to 12 grams per ton, which is good enough grade to go and do the direct shipping ore model. Basically put rocks in a box, haul them down to the railroad. And we can go in two directions. We can go north to Fort Knox. It'd be a great ore to blend with the Fort Knox operation and do the same thing we're doing in Manh Choh, more or less. Or the railroad goes down to Seward, which is a port on the Pacific Ocean on the Alaska side. And that then can be put on the barge and taken over to Taiwan.
Yeah, fantastic.
And we would do sell it to directly to the smelter there.
Okay.
So there's two options. We're evaluating both, and we'll see which one pays the best.
I saw also that you have like a patented box system. I really like that. It's like a 20-foot container, but specially done for direct shipping ore.
Correct. It just it makes it simple because it moves around with the forklift, so it's not building stockpiles and things like that. And if you have a stockpile, then you have to worry about the environmental impacts of the stockpile. Put it in a box. It's got a lid. There's no fugitive dust. Nobody can complain about it. It weighs 25 tons. You put it on a truck with a forklift. Again, easy, simple. We like easy and simple in the mining business. Give us 2 years. We'll get the drilling done in about a little over a year, complete a feasibility study, which is basically a mine plan, because again, we're not building a mill and a tailings facility, so simple. And then another 25 million to do the underground development, get our stope development in place so that we're now producing gold. Start up about 30 to 40,000 ounces of gold a year. And then over a period of a year, ramp up to 50, 60,000 ounces. And then obviously more exploration to continue the mine life.
Of course.
It's an underground mine.
Yeah.
Underground mines rarely have more than 5 years of mine life ahead of them.
Okay, super. What would be, let's say, your game plan if you look until the end of this decade? Where do you want to be? What should be production? What do you think you can achieve?
Yeah, so our third project, Johnson Tract, basically is 2 to 3 years behind Lucky Shot. Same plan. We have to get underground, so we're getting the permitting done to get that done and get the underground developed starting next year. We should get the permits by Q1 of 2026. Next summer, we mobilize equipment to get underground. We winterize camp. It's a very important thing, so we can work year round. And then a year to build the tunnel, a year to do the drilling and get the feasibility study done. And then it's wash, rinse, repeat, just like we did with Lucky Shot. So in 5 years, we expect to grow production to 200,000 ounces a year. We don't need to dilute shareholders because we have $100 million in the bank now, and we're making $100 million of free cash flow a year.
I would say that helps a lot.
Get Lucky Shot into production, and if we produce 40,000 ounces of gold, we're guiding to $1,500 an ounce all-in sustaining costs. If we use $3,500 gold price, be conservative, that's a $2,000 margin. That's another $80 million of free cash flow. If gold's 4,000, then
or 5,000.
So, or if it's 5, I mean, we're happy with the gold price.
Yeah, exactly.
That's the game. That's the game plan. What I like to say is we have a solid 5-year plan that we can self-finance. We don't need to dilute shareholders. What I want to do is I want to expand that to a 20-year mine plan.
Yeah, that would be exactly my question. How long can you make that then? Yeah,
we like this direct shipping ore model because it's simple.
It's fantastic.
We're playing it. We're kind of a niche operator that we're not trying to compete with the big companies or the intermediate sized companies. They want mines that can produce 200,000 or 300,000 ounces of gold a year. Most junior companies are telling a story that we're going to find 5 million ounces of gold and Agnico Eagles can buy me. That doesn't happen very often. It happens, but it doesn't happen very often. You got to be a good stock picker. So we get to play in the rest of that field where if you didn't find 5 million ounces, if you find 1 million ounces that fits our criteria, high grade, near infrastructure, and relatively easy to permit. Nothing's easy in the mining business, but if it's relatively easy, and if you're just permitting a mine, which is a rock quarry, that's simple. That's our business plan.
Super. I like that. Keep it simple. Make production. Make money.
Make money.
That's how it works. Super. Rick, perfect. Thank you very much. All the best. And I would say, keep it simple. Do it.
Exactly. Thanks so much.
Thank you. Yeah, ladies and gentlemen, that was Rick van Nieuwenhuyse, the CEO of Contango Ore. And keep it simple. Just mine it, ship it, DSO, in their own container, perfectly system. I must say this matches really great. And you have 2 directions to ship it out. So that's exactly what you want. And make a lot of money because those margins are fantastic. So check out the company. Thanks for watching us. And bye-bye from Zurich, from Precious Metal Summit.